Hi everyone, welcome back to Stars and Startups. This is your host Varun Vermidi. Yes, I'm back after a hiatus, and I promise we'll build up to about 100 episodes this year. There are 50 odd weeks left, and yes, you can expect an episode every single week from me, where I share my conversations with founders with you on this podcast. So, for those who wrote into me and wanted to find out when the next episode is going to be out, well, I apologize for taking a little bit of a break. I needed it. Now I'm back and super excited to churn out a ton of amazing episodes with Indian founders right here on the Stars and Startups podcast. On this episode, episode 51, I chat with Rajiv Srivatsa, the co-founder of UrbanLadder, who has built UrbanLadder since 2012 with his IM matchmate Ashish Goel, raised a ton of capital from high-quality investors like Kalari Capital, Safe Partners, including Mr. Ratan Tata, to grow the brand to becoming one of the most loved furniture retailers online in India. So we talk about that journey and also what he's been up to recently with his new stint at Antler. So let's get right into the show and say hi to Rajiv. Today we have a very special guest. He's been around. He's been in the startup ecosystem for almost a decade, probably longer. We'll ask him more about it. But this is a brand that he has built for the Indian market that has probably seen ups and downs like no other brand. Um, he is a quintessential, high achiever. IIM, IIT, worked at the large tech companies in India. He has his own podcast as well. I want to get into a lot of those with our special guest today, Rajiv of UrbanLadder. Welcome to the show, Rajiv. How are you?
Thanks, Varun. Always a pleasure, and I'm doing good. The year has started well.
Fantastic. A lot of interesting news flying around about what you're up to right now, which I'll slowly get into by the end of the podcast. But you spent about 8 years building UrbanLadder, which I think will probably define your life, for the next decade as well. Um, from in your words, I want you to kind of take us through kind of the journey, right? I'll ask you more specific questions, but I'd love to hear your side and how it started and what is the experience like?
I think I'm also philosophical enough to say that no one experience defines anyone for either a decade or any future time. And I think I've been lucky to have a lot of very good experiences, certainly Urban Ladder being one of the more prominent ones. And for me, Urban Ladder, of course, was a humongous discovery journey on confidence, on what I feel my North Star would be. And it is certainly one big stepping stone into what I'm doing next, right? And if you look at that entire journey over, let's say, a 7, 8 year period, started as a very underconfident, okay, let's go do this. I don't know how I made that big decision from employee to entrepreneur. I think I have to thank my co-founder Ashish a lot there. So the first 2 years were, really going super in depth into even understanding what kind of company we wanted to build, what kind of brand we wanted to be, setting the vision, the values, the core of what we were, making a lot of experiments, failing in a few, succeeding in a lot, setting a super team, I think a super culture in terms of the kind of people we wanted to be, the kind of ethos on customer service, on physical products. I think the first 2 years that way was just really organic learning and trying a lot of things. The next 2 years was crazy scale up, crazy capital, crazy scale up. Even the Indian startup ecosystem in that 2014, 2016 time period, there was just a lot of capital infusion and crazy scale up comes with its own learnings as a professional, as a founder, interacting with so many people. We started so many more setups. We got into so many more businesses. We started sourcing from outside India. We got into TV advertisements, a lot of press, a lot of coverage. We got Mr. Ratan Tata as an investor. We got, like a kid suddenly growing up. And that's what happened to us also. And with that also comes a lot of indiscipline and a lot of mistakes that you do as you go through that crazy phase of scale up, and sort of culminated in our first set of layoffs and pullbacks. And I would say the next phase was a lot of maturity in terms of pulling back, reducing the burn, going omni-channel retail, moving from a very fancy office to a far more frugal setup, changing our value system. I would say altering our value system to be more cognizant of who we were. This was the maybe FAC 2016 end to 2018 time period, and I thought we did a pretty good job of that phase, right? Years 5 and 6. The last 7 and 8, it's sort of is like a blur right now, because I don't know how to put it. I think we had a specific set of plans and what we wanted to do and how we wanted to go about it. We went into fundraise mode in that 18-19 time period. We thought we had a great story. I don't think the market felt that at that time. And 1920, we obviously underdelivered in terms of, I think, where we wanted to be versus where we should have been. Then COVID stuck. And personally, for me, I think that 1920 time period, I would say just the 18, 19, 20 time period, I was also in a zone where I felt there were just better people than me suited to run that business, right? Which has become more omni-channel, more efficient. And I took that call personally that, okay, 18, 19, if it had been a happy period, it would have been great, to do a fundraise and then move out. It didn't work out that way.
Right.
But I still felt 19 middle that, okay, let me move out because, it is in strong hands. It is with at least the hands that were better suited to run that business. And I moved out in 19. So I would say a 7.5, 8 year journey. But really for me, I think it has made me who I am in a way very strongly. One, my entire founder journey and wanting to help founders in every way possible through the ups and downs of it. Two is, I think I just love the job of creation or the process of creation and creating startups and really that very early stage of creating startups. And third is just overall, I would say confidence, communication, people, culture, product, so many different functional aspects, behavioral and functional, I would say. I've just become far, far stronger. I don't think I would have had a conversation or a podcast 8 years back where I would have said more than 3 words that made sense. But I think I probably and hopefully will say more words that make sense. But yeah.
There's so much to unpack, Rajiv. Thanks so much. From when I remember, I was in jabong.com at that time when UrbanLadder, popped up. And I was amazed, right? I was fascinated. I believe UrbanLadder was probably the first D2C brand in India before that word has even thrown around, right? As a and I remember my first memory of UrbanLadder was these Facebook advertisements that had thousands of likes on them, where there were different products that were being promoted. I'm guessing there was performance advertising based, products that were being driven, and which in a way also identified which products people wanted, and then people were pre-ordering at that time, and then there was a delivery post a certain date. Was that the thesis for UrbanLadder? And was even direct to consumer a thought that you guys said, what is a way to do it?
I think
because there was no other brand name. It was an UrbanLadder brand.
Yes. So I think a lot of things in the first 2 years, as I said, right, which is things that we figured that we got right. It was not as much by design, but a lot by intent, right? One, we were extremely clear, and this is something that obviously gets talked about a lot, as well as sort of maybe gets hidden, is we were very clear we wanted to build a customer-centric brand. Everything in our values, everything in our vision, everything, the way we operated, the way we recruited, the way we communicated on social media, we were very clear. We will do everything that it takes to make sure that customers get the best experience. We actually, very early on, 45 days after launching, we even pulled back from all India deliveries because we just could not give the same level of customer satisfaction in other geographies. And you can imagine, right, the entire startup ecosystem at that time was still very nascent. And which startups is okay with cutting off 30% of their business on day one, right, after just just launching. So we actually did that to say that we will be very customer centric, and it showed in everything, right? That sort of led to what we would call that we were very focused on product, whether that was digital product or physical product. We said, okay, what does customer centricity mean? Is to have a very simplistic experience digitally and a very strong experience on the physical product, right? Customer centricity also meant that when we communicate with the customer, whether that's on social media and whether that's on phone, whether that's on delivery, installation, we had customer-centric interaction. The brand at the end of the day, right, making it very visual, making it Facebook centric was more a tactical call, honestly, at that time, right? Because if you look at it, Facebook was really up and coming. It had still not opened up its newsfeed. We didn't have too much money, so we had to figure out low cost marketing channels where we didn't have to spend too much money. And we just figured, given we were very visual as a category, and the search as a category for furniture at that time was still very nascent. It had not really taken off, right? Because no one was actually buying or selling furniture online. So we said we will try a visual marketing channel, and really Facebook was the only option other than display ads. Display ads made it too generic. We were not able to target well enough, and Facebook was offering these tools for targeting based on people's interest, and we just went so in depth in it in terms of understanding what kind of likes and what kind of segments work for us. We actually became a case study for Facebook to go and sell to every advertiser in India. And really, I remember in 2013 there was a forum that Facebook organized, very early days of them opening up the news feed. In a panel, there were, it was a day full of sessions. There were 7 sessions by Facebook International, Facebook India Head, and this and that. There was one session by one company that was UrbanLadder, right? So to say that, hey, how do you use Facebook? And every single company trying to brand on Facebook would reach out to us either through Facebook or otherwise. And for us, I think the pre-order concept that you said was also an interesting experiment, right? It was turning I would say a threat into an opportunity. In the first 3 months, we figured we were out of stock. So we didn't have enough to sell. We were 70% out of stock and we didn't want to lose sales. So we said, what can we do that we can actually, get customers to still buy, but, not lose them to anyone else, right? Because we had opened up, we just didn't anticipate the first 3 months demand. So we got sold out so fast that we were just out of inventory for another 1 or 2 months. So we said, let's ask customers to pre-order, give them a small benefit for it because they're waiting much longer than anticipated or a standard delivery. And then also use that to plan our demand and our supply far better. So we just turned around that into an opportunity and created this thing called pre-order. That was not by intent. We actually wanted to actually deliver by 4-5 days. But because we didn't have out of stock, we just said, okay, 45 days it is. But a lot of interesting experiments, but all tied back to 3 foundational things. Very high on customer centricity, very strong product focus, and somewhere all of this being very consistent visually and on the brand and communication.
I read somewhere that scarcity is also a big driving factor for a brand. Maybe the pre-order business did help out a little bit over there, without maybe not by design.
Not by design, I do agree. At that time, we were still seen as premium, and one thing that worked for us is I think a lot of real people were liking us on Facebook. What other brands used to do was buy a lot of likes from bots, so they would get 1 million likes. But if you see, Facebook would say 2 of your friends like it. Now for us, you would only have 20,000 likes or 15,000 likes, but when you go, you would have 45 of your friends like it, and people were puzzled as to what this brand was that a lot of my friends were liking. So we were very concentrated in the way that we went, right? Instead of just spreading thin, we were very concentrated in the kind of likes we were getting. So that also really helped us on Facebook. And Facebook in the first 1.5 years was the primary marketing channel through which all word of mouth and everything about us spread.
What was the genesis of UrbanLadder though? Was this what you wanted to build? Like saying, there's a gap in the market for affordable furniture, and IKEA is probably many years away from India, and then we want to fill that gap because India is a value-conscious market where we could potentially create products either locally or bringing it from abroad, or I think China is like the hub for furniture as well these days. What was the thought process then? And this is 2012, where the world is very different from what we know it as today.
I think the thought process was very basic, right? In terms of, we said, okay, this is a need that we had when we were setting up our own homes. There was just absolutely no brand that was good quality, good basic service, and reasonable pricing, right? Either people were absolutely heavy on price, or they were, bad on quality, and they were absolutely horrendous on all of it, right? So we said, okay, it's a very basic requirement. Why on earth is no one been able to solve it? Then when we went into detail, this was around I would say end of 2011, early 2012, we figured that, okay, there are a lot of challenges. We just didn't anticipate that we would have to end up solving every challenge possible on earth. We thought still, we actually studied the ecosystem. We found good manufacturers in Jodhpur, in Rajasthan. And we thought, okay, at least the manufacturing is sorted. But all of these were exporters, right? So they were exporting to big clients in the US and UK, and they were not really making stuff for the local market. And local market, given the heat, given the way things get packaged and delivered, there were newer challenges that emerged, and we had to solve it much later. We knew that customers were not buying furniture online. We said, okay, that's the one challenge, let's go and solve by building a brand that stands for credibility. So, as you said, D2C was not even a word then. It was not a word even globally. We just figured that we were building a brand. We were very clear we were building a brand which stood for our own furniture. At the start, it was all curated. We didn't design our own furniture, but we got into designing very soon, because we realized that the ones that really stand out, or the ones that need to be given for the India market, does not exist today. So we had to go to the design board, and we also had to go to the installation and the delivery board on the other side, right? Which is because we figured that third-party logistics providers just did not know how to deliver furniture. Our NPS where we were delivering was 70. Our NPS where third-party logistics providers was delivering was almost 5 or 10 out of 100. We said we can't have this humongous disparity, right? And if you're building a customer-first business, we were very inspired with Tony Hsieh and Zappos. And we said we can't really, build a customer-centric business if the NPS is 10 out of 100. It has to be at least 50 to 70 out of 100. So I think we got into it thinking we'll solve one or two problems. We figured very soon we had to solve 4 or 5 problems, and that's how the genesis of that whole having to go everything in the brand happened.
I'm glad you brought up Tony Hsieh. Unfortunately, he passed, but he was kind of the guru of customer service and excellence, right? Because I think a lot of books written, and I referred to that when I built up the customer service at Jabong, and I enjoyed building that whole process. Um, and you referred this quite a lot in a lot of your discussions as well, how you try to maintain the NPS at above 75 points, and this is kind of gold standard, right? And I like the fact that even back in those days you were tracking this to the to such an extreme level, saying, okay, what is the NPS for our own delivery partner, what is the NPS for a third party delivery partner. Maybe there's, you broke it down to NPS by products as well, right? Can you take me through kind of how you structured the NPS? Because people struggle, most brands struggle to identify one North Star metric, and NPS most of the time gets poo-pooed because it is not accurate, or people have ways to neglect that number. Um, so how did you think about it? How do you get people to buy into it, and how do you structure it?
I think for us, because culturally and why we set out to do what we set out to do, we were super inspired by Tony Hsieh, as I said, right? And we wanted to say, I'll go a step back, right? When we started, it was not even UrbanLadder, right? When Ashish and me decided that we'll do something, it was actually in the grocery space, right? And over a 2-3 month period, we just said, okay, where is it that we are passionate? Where is the market big? Where is the need gap the highest? We just, over 3-4 months, finalized on furniture and home decor as the space we wanted to get into. We only said 3 things, actually, even before we decided the space. We said, one, we have to build a business which is stand out in terms of its customer service, right? So we said it has to be the highest NPS in the country, if not one of the highest in the world. Okay, so we went deep into understanding NPS, and I'll come to that. 2 is, we said we have to have a set of people that we are proud of, and whatever they do the rest of their life professionally, UrbanLadder would have been a big contributor to what they're doing or how they go about it, right? So that was a big part of what we wanted to build. 3rd is, we said we have to build a company that stands the test of time in terms of just as a brand, or in terms of corporate governance and ethics and just honesty and transparency in the way we deal with everyone, right? Whether that's the government, whether that's suppliers and stuff, right? These are the only 3 things we said. We didn't even finalize that it was going to be home and furniture and stuff, right? I go back to this only because this is foundational on the kind of company you want to build. If you're going to build something around cost, be true to that. If you're if you want to make money out of it, be true to that, whatever it is, right? And so when we went deep into NPS, we had cuts in every imaginable way, right? Whether that's by category, whether that's by city, whether that's by, and it was a very simplistic question after the delivery. It was to say, would you, on a scale of 1 to 10, where 9 and 10 means you would highly refer us to a friend, 7 and 8 means you would be neutral, and 1 to 6 means you will not. And it's a very difficult scale to win on, right? Because even if you're 8, Indians are very conservative in rating people also, right? So I would give an 8. 9 or a 10 means I'm super happy, right? And if you give an 8, you don't count as positive for us, right? So brands actually feel even at 20 to 50 NPS is actually pretty reasonable, right? But we said if you have to be the gold standard, and we were, right, in India or even in the world, a consumer business at our scale having 70, 75 consistently, except for a few blips here and there, uh, was just unheard of, right? And so we had a lot of cuts by category, by city, by, of course, by month, by week. And we would, every single one who gave us 1 to 6, we would have a personal follow-up, okay? And that happened continuously. So it was not a random sampling. We would go understand why that was, what is it that we had to fix, and obviously it would come out to one of 3 broader reasons that we would have, and these were not reasons that can be easily solved either on product quality or on delivery or supplier QC and all of that stuff. But as long as you make everything that you monitor better, and if NPS is the core of what you monitor, you will as a company make sure that every single piece of whether the interaction, whether that's a delivery, whether that's the online experience, whether that's just telling the customer and not calling them 10 times to come and deliver, every single part of it you will try and fix.
Did you break that down into products? What was the strategy to understand NPS? Because obviously you can't have NPS at a company level. You need to get into, why some things are going wrong or why the NPS is being dragged down by certain aspects. So how far did it go? What was the drill down there?
So NPS actually happens at variety of levels, right? One is you want to do it at a city level, because city operations, and why a city operations, is it communication at the delivery staff? Is it the time at which products reach a city? Is it something else about the expectation of the customer in terms of quality and value? So you'll have to go deeper into city level NPS, because every city has its own sort of expectations of the customer based on certain other local factors. That's number one. 2, you have to go at a category and at a product level, because even just a category is not enough. Okay. For example, within sofas, maybe leather sofas have a worse off NPS, or fabric sofas have, or let's say within wood, solid wood products have a reasonable NPS. Then you have to go at a category level and even at a product level, because what might happen is maybe there's a particular kind of a joint in a product which is causing some issue, or maybe it is causing too much more breakage. See, the thing is, you will largely be able to, the moment you track NPS and understand as to where the detractors are coming from, you will at least be able to fix out where all the flaws are. It is still not going to say where the delight elements need to be. Okay. So then you will have to also go the next level detail on saying, okay, these are all the places where the flaws are, and those are easier to fix. Now, how do you get the 9 and 10? Because what if people don't have flaws, but they are at 7 and 8? What is it that the delight element? So you'll have to keep outperforming yourself. What is delight in this year will not be delight the next year, because people have started expecting it. So you will have to then go to the next level on what is 9 or a 10, right? So you will have to come at it from both angles, right? Because the easier ones to fix, and there is a variety of cuts you can do, but everything needs some level of statistical significance. So when you're delivering 50,000 orders a month versus when you're doing 300 orders a month, there's only so much categorization, subcategorization you can do. But you just, as I said, you just monitor, and every single detractor, the moment it becomes a trend line and not an isolated case, you will sort of start fixing it. And that's literally, we had an RCA meeting every week. We would go into, and this all happened right from week 1. It is not an afterthought. So culturally, any person who came into the system, and that's a huge part, right? Whether that's the associate who's joining the customer service team, whether that's the fresh delivery associate, the first retail associate from fresh in campus, every single person is drilled into their head that NPS is everything in terms of how they'll be measured, and they better not even be in the system if they feel any other way.
This last part where you said anybody who gets hired, even from campus, anywhere, it gets drilled to their head that NPS is everything. Now, I believe this is a very important point, right? A lot of startups, businesses, don't have that non-negotiables, right? Where everybody is asked to look at a number every day, every week, and everybody knows, that's the first thing that they get a download of, right? There is a
Yeah,
ready reckoner for that. And if
yeah.
that is the case, and everybody is looking at it and discussing it, then everybody's aligned to the same goal, right?
And it starts from the values, right? So you go wake up, every one of the 1,500 people who would have crossed the urban ladder journey one way or the other. I think the only thing they will still remember is our value system, which after year 5 it morphed. So it used to be called chefs. It then became chase. Chefs and chase had three things in common. So people will never forget these three things, right? The C, H, and S. C stands for customer obsession. Okay. So it is drilled into the time you come, the orientation. I will always do an orientation. Everyone would have crossed an orientation with me or me and Ashish. And in that, I will make so much talk about it. In every all hands, we'll talk about it. In the appraisal, that is part of their assessment. In the communication monthly that Ashish sends, it's part of his communication. The weekly that they have with their managers, it is part of theirs. So it's not one time. It is a till the person exits the system, it is embedded into them, right? And two, in terms of so C, which is customer obsession, H, which is honesty and transparency, and S, which is stepping up, right? These three are embedded in literally from day one, like a broken record. And only if the leader and this, founders do it at 150%, will when it goes to some delivery associate in Ahmedabad, it goes at least 75%, right? So we will have to be like such a broken record as founders in every communication we do, okay? Because there is a loss, of that over, distance and time, right? So yeah.
Even when as founders, you work really hard to build some of these aspects, right, which become core to the business. But of course, the success of a business doesn't rely only on this. And the testament is obviously, you have a lot of capital that you've raised to bring about the brand value, create products that people love. um, in this journey, where did things not live up to some of the things that you wanted it to be? And was that a miscalculation, or was just the market? What was your learning primarily from, I believe, the last 3-4 years, right, of the journey? Because I think the first four were phenomenal. There was a meteoric rise of the brand, of the quality of products that you were delivering.
I think, in the first 4 years also, we had enough experiments that failed. And when capital is there, you mask all the failures. When capital is at a paucity, the failures come out bang in the open, right? So it's not like we had any lesser number of failures in the first 4 years. I would actually argue that years 5 and 6, we had as I explained, right? We had a reasonable turnaround and we had some of our best year actually then, right? I think there were too many factors, and usually what happens is success has like a thousand, angles, where failure is usually the leadership, right? Because we can't blame anyone else, right? I mean, if we have set a high bar and we have not achieved that, that's for us to take the ownership on. And that's exactly how I would look at it, right? I mean, if we had a specific set of outcomes and goals and we could not deliver, there were obviously a lot of contributing factors in terms of strategic mistakes, in terms of market, in terms of, but I would honestly, if you were to ask me, it just was a culmination of a lot of strategic mistakes also, right? Maybe we overcompensated on some strategy. Maybe the timing of our efficiency was not right. We were trying to be efficient in the 17-18 time period, when the market tanked in the 16-17 time period. And people in 18-19 were expecting a lot of momentum and growth. And we didn't have momentum and growth to show, right? If we wanted to do the efficiency thing, maybe we should have done it far faster and not taken 18 months to get to that efficiency, right? So somewhere I would, say that we probably just either misread the market in terms of what the market needed, and or certain discussions didn't go our way, right? And so we didn't hit some of our outcomes. And it's very difficult when, see, as a startup, as a VC funded startup, you're always being looked upon for growth. That's just the nature of that startup world, okay? Right. So when you're not showing growth, you have no one else to blame beyond a point, right? You just have to take that thing that, okay, maybe we needed to be efficient. And see, even today, right, UrbanLadder being acquired by Reliance means UrbanLadder is getting a fourth lease of life, right? to be taken to scale and taken. And if a brand like Reliance acquires an asset, it usually means that the asset is pretty strong. The price at which they acquired, that's a function of the particular situation in the market, right? And you can't beyond the point. We've had offers for 6x that earlier, right? And it's sort of very difficult to time some of this, especially in a year where COVID came and hit, right? So I would say the brand survives, the brand thrives, and the whole hope of someone like Reliance coming in today is to make sure that the next few years the brand really goes to its full potential. There was a time, probably a couple of years, where the market didn't work to UrbanLadder's favor. We could not land funding, because of which we had to take, from a deal perspective, it probably, was not at its best. But really, I would say, as long as, see, there are too many stakeholders in any company. There is customers, there is team members, there is financial stakeholders, there's the general ecosystem. And outside of, I would say, the financial stakeholders, I think UrbanLadder still continues to deliver for everyone else, right? In terms of whether that's customer satisfaction, whether that's the quality of product, whether that's vendors, suppliers, whether that's the team members that continue on in the new journey. So I would say that one variable to be optimized for one point in time in an 8-year journey, can't predict it, right? It just, it's not fair to assess the success or the failure of a company for one point decision. But yeah, I mean, certainly there were failures, there were mistakes that got blown up far more than some of the mistakes that we've done even in the first 4 years. And that's purely because I think, we just didn't hit some of the outcomes the market didn't. It didn't work with the market at that time.
Is the Indian market is it still ready for buying furniture online? Because it feels like it's a touch and feel kind of. I thought in 2012, 2013, when I saw the first ads, that people were ready to buy products at home, not having to touch and feel. But in the last 3 or 4 years, I've seen a lot of brands, including your competitor Pepperfry, open up stores and to showcase products and have an experience center. Is that a function of that's the only way to increase growth, or was that what the market is asking for? Because that's not what a D2C DNA is, right? A D2C DNA is saying, what, you order online, you get in at your home. There's no need for a retail setup, and we're basically taking away all that cost of dealership, having a store, having all these additional costs.
So I think D2C has sort of been, customized to whatever people want. But D2C is actually, if you look at it, it's direct to consumer, right? Through without middle persons, and that's the way I would do it, right? In terms of brands. And online, I think, was a starting channel, also because online is the DNA of the company you want to build. You're not building an offline first, an offline heavy company, right? So when a brand goes online, multiple reasons. One, you also are looking at hyperscale. Okay, as a startup, you're looking at hyperscale, and the market space of online only growth may not keep up with the hyperscale that the multiple brands in the space want, right? Because there's been an influx, like with Pepperfry, Flipkart, all of the other stuff, right? So you want to grow to be 1,000 crore company. Market is not growing 200% online every year, right? On a bigger and a bigger base. So that's not going to happen. So you probably need to adapt to what the market sizing is. Two, when I look at direct to consumer, the DNA of these D2C brands better be data, digital, and online. So when you open a store as a channel towards a consumer, you look at even the store and how to drive traffic to the store, to how to engage the customer at the store. Very, very digital. Okay. So a store is a channel to reach a customer, right? If a customer for a particular kind of a product, which is, let's say, a higher ticket, like a sofa, and we got some of this data by, we did a lot of trials. We opened our first store only in year 5. You have to be customer centric as a D2C brand. That's the number one thing, right? So if a customer does require for certain categories to be bought, to be physically be available, you would rather do it, right? Especially because you're a brand and you're in a non-standard category. So I wouldn't think, whether that's offline, whether that's even a Xiaomi app for their mobile phones, now are at a place where they need online stores. It's not like mobile phones hasn't moved to a 35-40% category online. It is just that they feel for the scale at which they need something offline. So I think it is a function of variety of things. As long as the DNA of the company is digital and customer centric, I would say you're still building a D2C brand, right? And offline just becomes a channel.
That's a very interesting way to think about it, right? Because I think people miss that connect, saying, you know what, if you have to reach the customer, I need to find more ways to get them to experience it so that they can actually start creating that relationship with the brand. And I think that's kind of the evolution of the market, right? So Reliance is a new suitor for Urban Ladder, and hopefully, the brand will live on. I think the brand has the brand equity that has been built over many years. What really happened when the news kind of broke that Reliance acquired Urban Ladder was that a lot of your customers came online and started defending the brand as to the kind of value that the brand has added to their lives, right? And this was very interesting. And I was one of those who went online and shared my experience with Urban Ladder, and of course defended the experience that I'd had. Um, and that was really heartwarming, right? To see all these folks come online and talk about the experience, even though uh, as far as the investors are concerned, it was not a success for them.
I think we have to thank our customers more than our customers to thank us, to be honest, because I think what the brand became and what the brand was known was also because a lot of early customers really spread goodwill and spread the word. And for us, we are always indebted to, all the customers through the life of the brand and even going forward. Because at the end of the day, I think, for Ashish and me, right from day one, I think it's always been about when we wake up tomorrow, we don't want an unhappy customer, right? And whatever we had to do, we've always optimized for that, right? And of course, we've made a lot of mistakes along the way, but really for us, it had always been about that. And next came the team, right? This was sort of, and I go back to again, the starting conversation. It was about customers, it was about team, and it was about being ethical and honest. And everything else sort of became after that, right? And so I wouldn't, based on those three aspects, I have absolutely not an iota of regret of where it is.
Have you always been a writer? Have you always kind of organized your thoughts? Because I saw even your LinkedIn profile, so nicely you have kind of documented your time at every role you've played, even your time at Urban Ladder. And it was, for me, it was very refreshing because not a lot of senior folk write about the things that they've done, and most LinkedIn profiles are just blank, right? um, and now you have your podcast, One Life Theory. So I think you're kind of putting all your thoughts into this. Is that kind of your passion, your hobby that you continue to nurture on the side?
So funnily, around I would say 13, 14 years back, there was an internal Cognizant blog post uh, contest that happened, right? And I have to thank
So
the
Cognizant's one
person.
of your earlier job, one of
Cognizant
your
was
roles
my
that
job.
you had.
Earlier to Yahoo, I was Cognizant for 4 years, then with Yahoo for 4 years, and then, of course, started Urban Ladder, right? And for me, in Cognizant, 2007, I think this was. And so Sukumar, who was Sukumar Rajagopal, who was the CIO at that time, he encouraged me to write a blog post. I wrote a massive blog post inside Cognizant. Okay, it went all the way to CEO Francisco de Sousa, right? And actually, Francisco called me to Florida to present to his entire leadership team in Cognizant. I was a manager, okay, just starting, 3 years after my MBA. And I was super kicked about that whole experience that actually the CEO read the blog, called me to present to his entire leadership team. And I got a lot of kick about writing that. And so I have to thank the Cognizant folks. But it sort of, then I went to writing some humor stuff and some, I would say, PJ stuff from my Chennai, experiences. And somewhere I think I restarted writing only in 2017, 2018 after going through all of these experiences. Because as I said, I think you go through so many experiences as an entrepreneur, both professionally and personally, that I figured being vulnerable was a great attribute for a leader and a great attribute generally for me to connect with people. And I just could do it more naturally, right? So for me, if you see me on LinkedIn or on my podcast, which I'm pretty irregular at, but being vulnerable is a great way to just share and connect with people. And I just feel very confident in admitting to failures. Not too many people do that. A lot of people mask, a lot of people make it sound very positive. But I'm absolutely happy to say this is where I screwed up, and able to take ownership of some of that even when others don't want. Because that's what life is, right? And there's this new aspect of philosophy that's added to my outlook to life in the last 4 years. I think it just made me better as a human, but that's sort of what you will see reflect on everything, whether that's this podcast, whether that's a session on Clubhouse, whether that's on Twitter, whether that's on LinkedIn. I think all of us should take life slightly easier, should be more willing to share. And there's no blame throwing. There's no, the past is the past. This is about making sure that the next set of people who sort of come on board do things far better from our experiences. They don't have to go through the same failures, and I can see that, right? For me, even the Antler journey, a big part of that is that. But yeah, that's sort of what made me start writing again.
I want to get your Antler journey in just a moment. While I was reading up on for this conversation, I found a very interesting post you had made. It says the real reasons to start up fall into three buckets. I would love for you to take our audience through the three buckets and where in the three buckets you fall yourself.
You'll have to tell me the three buckets because I have done right now close to 120 posts, and I always think in three. And while I'll have one or two which are common, I may not exactly mimic the three that I put on that day because I write my posts in 10-15 minutes. So it's not like all the frameworks are stuck in. Why don't you tell me the three? And
so three buckets, and I'm reading from your post, right? Rajiv's reasons to start up. The real reasons to do a startup fall into three or more of these buckets. You love creating something out of nothing. You love the joy of getting your hands dirty. You love the flow that it gives you. That's number one. Number two is you have a dying urge to solve an unsolved problem in a new way. You're not able to sleep thinking of this problem. You have an affinity to solving this problem for the customer segment. That's the second bucket. And the third bucket, a strong urge to create an institution and a legacy that lasts way beyond yourself. You want to grow it to scale and grow as a professional along with it. I'd love to know from your perspective, which buckets did you fall under? And was this inspired by your journey?
I think for me, it was all three, right? I would not do something if it is not all three. Okay. Whether that's Antler, whether it was what I did in Yahoo, and the moment I stop having the flow or the fun, I'll be the first one to admit, right? Somewhere in year 6, 7, that started happening at UrbanLadder, right? I was not having the joy of creation or the flow, or of, the institution had come to a particular point, and it was, so for me, all three have to be there in whatever I do at any point in time. Otherwise, it just goes back to one life. I have one life. If there are better people to create this institution or to have flow in this, let them come and do it, right? And for me, the reason why all three are important is I just love creating. For me, solving a problem for someone and creating impact has always been a big part of how I live. And creating an institution and a legacy is the story that we all tell ourselves. But it's a story, unfortunately, that humankind has to live by, right? So all three are important, whether in reality or as stories. And unless I'm doing all three in anything that I take up and do, I don't think I will be the right person to do that piece, right? So it's always been all of this in anything that I've taken up and been at for a while. And when one of this starts taking a hit, I start losing my enthu on that.
So your journey at Antler has just begun. Why don't you give an intro to Antler and what you're doing with them?
Okay, so Antler is basically helping you at the earliest stage of the startup journey. It's helping very early stage founders, and it's a very thought through reason why, obviously, I decided to do Antler, right? One, I was in the gap after UrbanLadder, figuring out next, and I was very clear that I wanted to be of impact in the Indian startup ecosystem, in the earlier stage of the Indian startup ecosystem, right? Because I'm not an investor. I had never invested in anything before, right? So I had to really be the co-founder or the founder of either my own startup or people who are doing that as founders of other startups. I am generally a very ideas guy. I love width of ideas, and I love going deep into specific areas, which I like, whether that's functionally, whether that's specific sectors. I love talking to smart people, which is talent, whether that's hiring, whether that's founders. And I love the business of using capital to scale and build an institution, right? So if you look at the culmination of these three, which is capital, talent, and ideas. Investing is right bang at the middle of it, right? I didn't want to just be a VC investor, right? Because there you're really playing the capital game. Of course, you're the ideas and talent game, but there are, I would say, 50, 100 other better people than me. I wanted to go, and goes back to the UrbanLadder days. We love creating categories. I love creating something out of nothing, right? So if you look at where Antler plays, there is seed stage funding where entrepreneurs have already created something and are trying to raise anywhere from $500,000 to $1 million, right? And that's, let's call it seed stage, right? And there's a bunch of seed stage investors. There's so much more capital. There's so many more investors today in India. We go at one stage earlier where the founders, there are, I would say, four sub stages before that. One is I have just created something, I don't have enough traction. I'm in the process of creating something. I have just doing customer validation. I'm yet to start creating something. And I am dabbling with a lot of ideas. Okay, so what I call stage 4, 3, 2, and 1. Okay, the earlier it is, the more, just early in the journey it is. Antler's job is to really go and help you across these four stages in some form or the other, right? There are no institutions. There are a few accelerators and incubators which have tried their hands, but no one does a bang up job in terms of providing the ability to help that founder build their stuff, as well as something unique that Antler does is to take startups global, right? And that's what I loved about Antler and partnering with Antler, the global institution. For me, Antler India is a startup in itself, right? So the way I look at Antler India is it's a startup that's helping startups, right? And it's an institution that's being built in the next 10 years to do what, can we create 1,000 startups in the next 10 years, okay? And 1,000 scalable VC fundable startups, because the job of Antler is not just entrepreneurship or founders, but it is actually to get them to scale and to be unicorns, right? Because for me, a unicorn is a great proxy for companies that achieve scale. While I could not do that with UrbanLadder, there's no reason why I can't try and do that with 10 other companies in the next decade. Use my learnings, use all of whatever I have learned to do a far better job in this avatar, and do that with 100 other smarter founders than me, and really be the support for them to be able to do that. So I think that's sort of the avatar with Antler. And it's been a great start in the first 7 months because, we have set the team, we have thrown open the program for the first set of applications. We've got 1,700 applications. We have to pick 25 founders now to work with to help them in this very early part. We've gotten a bunch of Deca founders and, to come in as investors. So there's a lot of very positive momentum and action. You'll be seeing a lot of Antler this decade of India startups.
Fantastic, Rajiv. Wish you the best of luck with in your new avatar. Appreciating the time to chat and talk about your journey.
Thank you so much, and it's been obviously a pleasure sharing all of this. And I would say, at the end of the day, professionally, personally, as long as we are doing things which by choice and impacting certain lives outside of our own, I think there's a lot of joy. And I just touched 42 last August. They say 42, you get the answer to everything. I think I got the answer to everything, which is I figure people. And as long as you're with people, whether that's having a 1 hour conversation on a podcast or working day in and day out, you respect the people, you have fun with those people, and you have an exchange of ideas and shared values, I think you will be all fine in this world. So that's my biggest realization over 42 years of my life. If there was one learning, that's the only learning. So I just align a lot of stuff that I do with people that I like, and just be true and honest and be vulnerable, because that's a great way to relate to people. So thanks again. Awesome talking to you.